Please read this disclaimer carefully before proceeding further. Hello traders, in this video we'll be looking at importance of multi-time frame analysis, and we'll look at one particular example on EURUSD. We planned a short, we found this opportunity and we took this trade. So I'm going to walk you through this entire process of multi-time frame analysis and how we took that trade. Thanks for joining me in this video. My name is Vic. Let's look at EURUSD. Any kind of opportunity that you're looking at to trade in the market has two factors to it. One is context, other one is called execution. Now context is the reason why you want to enter the market. If you're looking for a long opportunity on EURUSD or short opportunity on any other pair or whatever you want to do in the market, you need a reason why you want to do that, and that reason must come from higher time frame, and that's why we should be performing multi-time frame analysis. Now other part is execution. Execution comes from lower time frame. So what we do as part of multi-time frame analysis, we try to find an opportunity on higher time frame which we can execute on lower time frame. So we'll look at this example of EURUSD. We can obviously see that this is an impulse which has brought the market down, and we are looking at monthly time frame for swing trading point of view. Market has come down and then started to move higher. This obviously has created an impulse, and then we have a correction right there. Then market started to move right down. Okay, so we can see that this is impulse, correction, and then we have another leg after that. And we see that market came to this particular level right there. And this may or may not be a coronavirus related, but that does not matter, because as traders we trade what we see on the chart. For us it is the combined behavior of buyers and sellers which is presented in terms of candles on the chart. So even if this monthly candle turned out to be like a spindle and it's kind of indecision at the moment in that candle, that does not mean that we can ignore it. We will have to take this in consideration, because whatever happened in terms of the struggle between buyers and sellers, that is being represented by this candle right there. So we cannot ignore it. So what we do here is we draw Fibonacci on it, and once we draw Fibonacci, we can see that market actually came to 38.2 Fibonacci level, which is an important level. So what we do is we draw a line there just to remind of that this is an important level. Okay, now what we do is we go to the weekly time frame to see what kind of structure we are having. And if you follow my analysis on YouTube or TradingView, you might have seen me actually talking about this short opportunity which was right there. So we can see that market actually fell down from that level. So what do we expect? We expect that when market comes here to the same zone, we can expect some kind of reaction there. We can expect market to roll down once again, and that's an opportunity for us on weekly time frame. So we can also see that we have a W pattern which is going to complete similar kind of zone somewhere around the same area. So what we do is we go to the daily time frame and we look at that W pattern even in better shape. Now we can see there is a W pattern right there. If you can't spot it, this is how it is looking. This W pattern completes right here, and because the W pattern is completing there, we have now our execution style as well. So monthly time frame gave us the context why we wanted to trade this for short, why we wanted to plan for a short entry in EURUSD. That was the context, that was the reason coming from monthly time frame. Then on weekly time frame we went there and we tried to find any kind of opportunity which we could actually take around the same zone. So on weekly time frame we saw that there is a W pattern which was appearing. We went to the daily to fine tune that thing to see that W pattern in a better way, and we could establish that definitely this is a W pattern completing around the same zone. We also had few minor W patterns right in the middle. So we also had another W pattern which is around here. This is the most recent one, but this is kind of like questionable because the midpoint of this W pattern is actually lower than the previous one. So this is questionable, but a few traders actually do look at this one as well. So this is our major W pattern, which is completing around here, and when the W pattern completes, we know that market is supposed to go down. So this is why I actually presented that idea that market was supposed to go down. And you can see that idea right here. I posted that on June 7th, around here. We knew that market was actually coming here, and we could see a reaction. Now I also mentioned that it could actually go higher, but before it goes any higher, we need to look at this reaction. If we can play this reaction for a short trade, then we can make a lot of profit out of that. So this is what is happening right now. And how do we find this WNM patterns? There are very specific Fibonacci ratios that we follow as part of our training program as well. But what you can see here is that you can take the Fib and you draw from top to bottom on this impulse leg, and you'll see that it has come to 88.6, and that's exactly where our 38.2 Fibonacci level from the monthly time frame is. So this becomes our high probability reversal zone. And look at the accuracy of this thing. This is such a nice zone that market came here, nearly touched it, fell back down, and then started to move back up, touched it again, and started to move down. Now if you had placed your stop loss somewhere around here or even around here, you would have definitely made 1 to 1 or 2 to 1. If your stop loss was very narrow, then you could have made nearly 5 to 1 or 4 to 1 reward to risk right there. So that's the power of multi-time frame analysis. We look at the higher time frame and we see why it is actually trying to go in a certain direction. There's another trade that we took. It is little older than this one. Let's go to the monthly time frame once again, and let's see where we are. Right, so on monthly time frame we can see that it is moving higher. This is an impulse, and then we have a correction right there. And if you remember, around February or so, I've been saying that market was bullish on EURUSD, and the reason behind that was, if you draw Fibonacci on this leg, you'll see that 78.6 Fibonacci level is right there, and that is the only reason why I've been saying that the EURUSD was going to go higher. As you can see, it has been pushing from the same level again, third time, fourth time, and so far it has not been able to break that level. So every time it comes here, it becomes bullish and it starts to move higher. So I was able to take a trade right here on at this level. So let's look at that on daily time frame. If I go to the daily time frame, what I can see, that market came right here into that zone. It touched that 78.6 or monthly, and then we saw an engulfing candle, and that is where I took the trade. So you see, higher time frame analysis, multi-time frame analysis is very important. If you want to increase your chances of success in trading, then you must perform multi-time frame analysis. And if you're performing that using number based system, like Fibonacci based system, then it is going to be far more accurate. Remember the one that we just saw, the short we saw, remember that zone was such tiny thing, right? And that happened because of Fibonacci levels. It didn't happen because of anything else. It happened because of Fibonacci levels. If you have anything else in the same zone, like support resistance or supply demand or moving average or anything, that's additional plus. But if you are aware of how to apply Fibonacci's to WNM patterns and how to draw impulse and correction, then you can perform very good multi-time frame analysis. So without the context of multi-time frame analysis, most of the traders are lost. What they do is they actually look at one time frame. They'll probably look at daily time frame or 4-hourly time frame, and they'll start to base their decisions on there. Let's assume let's look at this particular example. If you are standing around here and you're not looking backwards at the higher time frame, then you're possibly missing this entire thing. Even if you are looking at this previous structure, you'll probably think that, okay, my support, my resistance zone is probably going to be somewhere around here, right? But you see, the market never actually came there. It touched that Fibonacci level and started to move down. Even if you draw it somewhere, something like this, it never came there. So if there was one trader who thought, okay, this level of 13849 right there has been broken. Remember, this candle at some point in time was a big bullish candle which was swarming, right? So a lot of traders were actually getting stuck there because they thought this was a breakout and it was going to go into this support, this resistance zone. But that never happened because we had very good Fibonacci level lining up with another one on the daily time frame, and that's why the market reacted once and then again reacted twice. There is another thing which is a double top kind of pattern around here which showed that market was going to go down. So most of the traders base their decisions just on one time frame, and that's why they get caught. They look at one particular structure or one candle and they think that this is going to go down or up. Thank you for watching. Find and follow us on these social media channels.